Hi everyone, this is Alex from Startup Recon, and I'm here with the CEO and founder of SFC Capital, Stephen Page. Stephen, would you like to just quickly introduce yourself?
Yes, hello everybody. I'm Stephen Page, and I'm the founder and CEO of SFC Capital, a 8-year-old investment business.
So, Stephen, would you be able to tell me a bit more about how SFC Capital came about and what were your motivations for creating it?
Sure. Basically, my background is a software entrepreneur. So over the last 30 odd years, I've built a couple of companies in the software industry, one called DataEase, one called Sapphire, had a couple of exits. So, I come from a background of, relative success in building technology companies. And the obvious thing that someone like myself and hopefully many others do once they get that level of success is you start to get involved in other people's companies. So you start to show interest and invest and advise and all the rest of it into startups. So maybe 10, 12 years ago, I was approached by a number of young companies to help them with their, it was actually, when it began, it was all about helping them build their applications or their websites or whatever it was. So the first incarnation of SFC Capital was doing that. And then in 2012, it was obvious that what people really wanted was investment. So together with a couple of friends who helped me, I started what was called Startup Funding Club. And originally Startup Funding Club was a company that was essentially an angel network. So led by myself, we invested in a few companies in the early days, 2012, 2013. We were very lucky that we could do pitching events at a very well-known club called Home House, which is over near Marble Arch. And in those early days, it was more like a Dragon's Den type arrangement. So we called it Crocodile Lair, and which was very similar style. We started off with the sort of panel. Eventually it moved to general pitching. But in that first few months, we had a couple of great companies actually. And the first one that we invested in as a group of angels was a company called Onfido. And I'm sure the viewers of this have heard of Onfido. If not, go and look them up. It's a great company. We were the first investors in this company, group of guys from Oxford, 3 young lads who came to London. We put them in our office, incubated them in inverted commas. I was a director, and we got their first funding at a very reasonable valuation of under $1 million. And that company today is booming with a 350 million plus valuation. So that's a great example of what investors are looking for. Around that time, SEIS had come out. And SEIS, as again, hopefully the viewers know, is one of the great catalysts to success, catalysts to a lot of investment that's been going on into startups. So we took the opportunity and thought, well, maybe we should put a fund together. So, and a fund being where investors or private individuals rely on us to make the choices of investment. So our first fund came out in early 2014. And that's really how the company started.
To talk a bit more about how you choose these startups to invest in, what is your current process? What's like the business model of how do you choose these startups? I know before you said there was a Dragon's Den type, but is that currently how you do it?
Not so much now. We've moved on quite a lot in those 6 or 7 years. We now are, in fact, the leading SEIS investors in the UK as a fund. We're doing somewhere in the region of 40 to 50 investments a year into new companies. That's our SEIS fund. And we have an EIS fund, which then invests into the best of those companies we've invested in at the SEIS level. How we select them, I think over the years we've become pretty well known. And so we have a whole network of people out there sending us companies. So we typically get 2,000 companies a year apply to us for funding. We have a team now. We have a company of 12 people. So we have a team of 2 or 3, depending on the time of year, but who are looking at those companies' applications. They then will have a half-an-hour introductory call. If the company passes certain criteria, which we can talk about, then they will come through to the next meeting, and so on and so on. So there is there's quite a detailed process now to go through, and then eventually we will select, the right companies to become part of a portfolio of companies on behalf of our investors.
On the investor side, how does an investor qualify to join SFC Capital?
Yeah, so the funds are for professional investors, and professional investors are typically people who know what they're doing, basically, who know the risks. They can be high net worths. They can be sophisticated in as far as they're already involved in the financial services industry, but they absolutely know what the risks are associated with investing in into early stage startups. So, that basically is the types of people that invest in our funds. Angel investors, of course, is a different aspect. An angel investor decides themselves where to invest, whereas our funds, we invest on behalf of the individuals. Angels will make their own decision and will invest alongside us, but it's their decision, and they can be anyone.
Currently, how many startups are you investing in at the moment?
Yeah, we invest 40 to 50 new startups every year, and probably in the region of 10 to 15, maybe even 20 at the second round. So first round, which is the SEIS round, which is typically somewhere between 100 and 500,000. There will be 40 to 50 of those a year. Then the EIS round, which is typically the second or third round, will be a larger round normally, although not necessarily. And, that's follow on when a company has shown some success after the initial seed funding. So they have to prove that they've done something. So when they come to us originally, they say they're typically going to get invested for the next 12 months. And during that 12-month period, they've said certain things they're going to achieve. We will work with them during that period. We'll support them and help them as much as we can. And at the end of that initial period is when they require further funding. And if they've achieved what they said they were going to achieve or somewhere near it, then they will qualify for our next round of funding.
And do you normally invest in startups who already have a product out, or people who are looking to bring a product out to the market?
Well, we basically will invest in at the very early stage of funding, which can be called pre-seed, it can be called seed, whatever you want to call it. It's called different things for different people. But it's essentially the first large round that a company takes. Because it's their first funding, they quite often don't have a product in the market. They will have a prototype, they will have a minimum viable product, they will have some evidence that there is demand for what they're building or developing. But very much at that stage, it's about the people. So what we are looking for above all, and we put probably half of our decision making around this, is the team. Is that team capable of doing what it says it's going to do? Does it have a leader who's going to drive that company forward? Does it have a team of people who are going to support that leader and be able to provide all the various areas of a business. So, ideally, a team of 2-3 founders is what we're looking for, with a strong CEO who's often a sales type person, then a strong COO who will make sure that the organization is running properly. And it depends on the type of business, but quite often a CTO, if it's a technical business, they have to have a strong technology leader. So very much around the team at the early stage.
What kind of sectors do you guys invest in? And are you looking to expand into new areas in the near future?
Well, actually, we have never really specialized in one sector. So we believe that, across all sectors, there are great entrepreneurs emerging all the time. And, we will not preclude any type of business, as long as it qualifies for the tax breaks, SEIS, EIS, we will not preclude any of these businesses. So, we've recently invested or are investing into a couple of beauty companies. We've invested in fashion. We've invested in all sorts of physical type product companies. And then we've invested in some deep tech, some AI, some blockchain, some robotics, some augmented reality and virtual reality. So right across the spectrum, because again, we're looking for caliber teams who know what they're doing, who can really make something of their idea and their early experience.
In your life in SFC Capital, what were your biggest challenges and rewards throughout the time?
The biggest challenge we have is always finding the best companies. At the end of the day, our job is to go around the UK and find somehow under the rock or the stone or wherever they might be, the best new companies that are out there. So we want young entrepreneurs, not necessarily young in age, but young in their company will be young, who are at the beginning of the journey, to see us as their first port of call for funding. And, hopefully they are across the whole of the UK, not just London, not just Oxford and Cambridge and where the universities are. All across the country, there are very interesting early stage companies emerging. And finding those is our biggest challenge. Finding the best ones, getting in at the right time, and making sure that the deal that is done is the right deal that will eventually give a good return to our investors. Because at the end of the day, our job is to find the best companies that can return as much as possible, maximum return for those people who are investing in those companies through us. So that's the challenge. And we have recently were awarded by the British Business Bank through their British Business Investments, through their regional fund. They allocated £10 million to us in March, which means we can draw on that money for every investment we make. But ideally, the more regional investments that are made, the better, because the formula we have to draw on that money is more favorable to regional companies. The reason that the British Business Bank came out with that scheme, British Business Investments came out with that scheme, is to generate more activity in the regions as opposed to London, where typically, the largest percentage of startups certainly was in London by a long way. And I don't know how COVID's going to affect that, but potentially it could affect that, so that more are coming from the regions in future if people are moving out of London. But generally speaking, the whole idea of that scheme was is to generate, create entrepreneurs and businesses and generate funding outside in the regions. They didn't have, I would say if you were a startup in Cumbria or somewhere, it was very difficult to find funding previously. And that was the idea. And that's why we're very much a national company. And we're looking for as I come back to the main challenge, finding the best companies throughout the whole of the UK.
And are you looking to expand internationally in the future, or are you going to keep it just in the UK?
Well, we already have a partner in China, for example. So I was in China last year, not this year, sadly, because of the virus, but we were there last year. We were presenting at a conference. We do have a couple of, maybe 4 or 5 partners there, including the Shenzhen stock market and a very large entity in Beijing called ZGC, and a partner in Shenzhen called Linrun. So we have partners in China. They are looking, obviously, for great UK technology companies to invest in. And they've already made some investments through us into those companies.
And how has COVID affected the investment in these startups?
So far, what we've seen is investors at the early stage through SEIS and early EIS has continued. Investment has continued, probably even at an increased rate. We haven't seen a drop-off this year. In fact, our funds are larger this year than they were for the same period last year, which is very encouraging. Angel investors, we've not seen a drop-off again for new companies, exciting companies. At the end of the day, top quality companies will get funded. They will find the money, whatever happens. So, you know, on the investment side, I think we've been fine. We've seen an increase. Startups, again, new ones, there's no decrease. You know, there's absolutely the same volume, large number of companies applying for investment. Obviously, the types of businesses they're in, the types of activity has changed a bit. We've seen a lot more companies that are involved in, for example, telemedicine, remote, anything to do with remote working, you know, health and welfare that can be done through postal services, you know, such as blood tests, all sorts of things. So we've seen a big increase in that sort of thing, but that would have come anyway. All COVID's done is speeded that up. It would have happened anyway. So, you know, so we've seen, I suppose we've seen a bit of a change in that. Travel companies, not so many, of course, at the moment. They're hiding at the moment, poor things, but they will come again. And we've already got quite a few in our portfolio who have hunkered down and survived and will come out the other side very strongly. Some of our portfolio companies, actually, we've got well over 200 companies that we've invested in. And quite a few of those have done really well. And for obvious reasons, really, they're to do with delivery or some sort of product that you can sell it, that you can, for home use. Bicycle company that we invested in, it's done really well. Home, as I say, home hobby kits, flower delivery, you know, all sorts of very interesting companies have actually benefited, which is you know, the silver lining, I suppose. But there are some that have done very well out of COVID, and which is a real boost from others. I think have just hunkered down with the benefits of the government scheme, and they have survived and will come out the other side, hopefully very successfully, to prosper. So we've not seen any casualties, actually, and we've, as I say, we've got 200 plus companies.
Yeah, it's amazing.
Yeah.
Hopefully those companies will return with full force when this COVID is over. Just a last question, more personally, do you have any useful advice for investors?
For investors?
Yeah.
I think I would always say for individual investors, probably invest in a portfolio. So if you are choosing, you know, if you're an angel investor and you don't want to invest into a fund such as ours, for example, for whatever reason, you still need to do a number of at least 10 to 20 investments, because at the early stage, it's SEIS, early EIS, and even right through, it's very much a numbers game. So, you know, you're going to find 1, 2, 3 out of 10, 20 will do very well. But if you only do 2 or 3 a year, you know, you're not necessarily going to get the returns that you expect. So you do have to really do that portfolio approach. And the other thing with an angel investor, they have to have time. You have to spend time with your companies to really get the benefit out of that. If you can help them, advise them and support them, please do. Otherwise, you should invest through a fund such as ours, where you will get a portfolio of 20 companies for each investment you make.
Perfect. Well, thank you very much for the interview, Stephen. And if you guys would like to find out more about SFC Capital, the links will be down below in the description. Thank you very much for watching, and I'll see you next time.
Thank you.